Okay, you guys, the next topic in our current liabilities chapter is payroll. You might be wondering why include payroll with current liabilities. Well, what we would owe the employees would be due to them in under 1 year, of course. But also anything withheld from the checks of W-2 employees would be owed by the business to the various parties the withholdings go to, the federal or state government, and possibly insurance company, to name a few. Those are your three main ones anyway. So as soon as those amounts are withheld, it creates a liability for the business who's distributing the payroll. Okay, so let's look at a problem here with it. You guys, I think you'll find these journal entries to be fairly logical. It's going to look the journal entry to record the payroll itself is going to look a whole lot like a check stub. So I think that might help. We'll talk more about it as we get to the entry. But here, Kris Kringle Company has one employee who is paid a salary of $8,000 per month. Federal income tax withheld was $220. State income tax withheld from the employee's check was $60. The FICA Social Security tax rate is 6.2%, and the FICA Medicare tax rate is 1.45%. We usually combine those and think of the FICA tax rate as 7.65%. Now, FICA stands for Federal Insurance Contributions Act, but our FICA taxes, you guys, are Social Security and Medicare. Now, it's withheld at 7.65% from employees' checks, and that has to be matched dollar for dollar by the employer. Of course, if you're self-employed, you have to pay both halves because you're the employee and the employer, so to speak. There's no limit on Medicare. You and your employer would have to pay that on every dollar you earn during the year. Now, there is a limit on Social Security. So employees only pay Social Security on the first, I think it's around $160,000 they make every year, and the employer only has to match it to that point. So, for instance, if an employee made $1.6 million in a year, they would only pay Social Security tax on 10% of their earnings, approximately, and the employer would only have to match on that 10% of their earnings. Most people, I think, don't realize that because, of course, the majority of us would make below that limit. The federal unemployment tax rate is 0.8%. Now, that's paid by the employer based on payroll, and it's only paid on the first $7,000 of wages per employee per year. State unemployment tax is 5.4% on the first $7,000 of wages, again, per employee per year. And those unemployment taxes are paid by the employer, not the employee. But the employee can benefit from it, right? If you're laid off or fired, you could draw unemployment. It's kind of an insurance against losing your job, right? And it's your money. If you qualify for the benefit, go sign up. Because in theory, if the employer wasn't having to pay that into the government, it would be a part of your paycheck. In addition, $590 of medical insurance premiums were withheld from the employee's pay. Okay, now you guys, going back, the federal income tax, of course, that's withheld from the employee's checks. There's no match by the employer. Same with state income tax, withheld from the employee's check. Doesn't have to be matched by the employer. Now, the employer, in this case, old Santa or Kris Kringle here, would have to pay federal and state income tax, but that would be based on their taxable income as a business, not based on payroll. Okay, so let's take a look at the journal entry here to record the payroll itself. Now, this is the one I was telling you looks like a check stub. So what we're going to do, we're going to debit an expense account, salaries expense, for gross wages of $8,000. Could be salaries expense or could be called wages expense. Here I think it's probably wages expense. No, it's salary. They're a salaried employee. You guys, the difference being we typically call it salary if it's an annual amount, like a contract for 60 grand a year would be considered a salary. Employees who are paid by the hour, we typically call that wages. But anyway, we debit the expense account there for the gross amount of $8,000 from here. All right, now for all the withholdings are going to create a liability for the business. Because again, they're due to some third party. It's almost as soon as the amounts are withheld. So for federal income tax withheld, we'll credit income taxes payable. Now here they combined federal and state. The 220 plus the 60 gets us to the 280. I think you would want to keep those separate because they're probably going to separate places, but that works though for our purposes. And then we're going to credit FICA taxes payable for the Medicare and Social Security withheld from the employee's check. Let's look at how we got to that 612. We'll take $8,000 in gross salaries. Sorry. Always trying to show you the news in here. There we go. Okay, so it's going to be $8,000 gross salaries times 0.0765, which is 7.65%. And that gets us to $612 FICA taxes withheld. And that's our credit here for 612. Then we're going to credit, what else? An accounts payable to the, let's say Blue Cross Blue Shield or the medical insurance company for $590. Blue Cross Blue Shield is the one I seem to be most familiar with. But that's an accounts payable to whoever this company's health insurance provider is for $590. Okay, so you guys, at this point, it kind of looks like a pay stub, right? Here's gross pay. Here are your three withholdings. So if we want to know net pay, or pay actually due on the paycheck to the employee, we would just do like we do on the pay stub, right? Gross pay minus the three withholdings gives us net pay, which we'll credit to salaries payable, another current liability, and that's just the difference, again, in gross wages and our three withholdings. Now that's the entry to record the payroll. What do we have here? An expense increasing by $8,000, which causes net income and stockholders' equity through retained earnings to decrease by $8,000. And then all of these are liabilities, and they all increased, and if you total them, it comes back to $8,000 as well. So liabilities in total increased by $8,000. All right, now that's the entry to record the payroll. No cash was involved, so we don't put anything in the cash flow column. Now here are those calculations for you again. They calculated Social Security and Medicare separately and added them together to get the 612. I just added our percentages together and multiplied the total salaries by 7.65%. Either way works, of course. Okay, next, to record the employer's share of payroll taxes, the account we're going to debit is payroll tax expense. Now this entry is to record taxes paid based on payroll by the employer. Okay, so the debit will be to payroll tax expense, but we don't know the amount yet. Let's leave that blank here and we'll come back to it. Now from up here, which taxes does the employer have to match? We mentioned it already, and you probably know, but they're going to have to match the Social Security and Medicare or FICA taxes payable. So we'll credit FICA taxes payable again for 612. Has to be matched dollar for dollar. So you see that again here. Now the employer also has to pay federal and state unemployment. Well, the federal unemployment rate is 0.8%. So let's take a look at that calculation on our Excel spreadsheet. So we've got gross salaries of $8,000. But remember, you guys, the federal unemployment is limited to the first $7,000 each employee makes each year. So the employer here won't pay the federal unemployment tax on the full $7,000. On the full $8,000 of employee earnings. They'll only pay it on $7,000 because that's the annual limit. So our federal unemployment tax will be equal to the $7,000 limit, which was hit by this employee here in month 1, times the federal unemployment rate, which is 0.8% or 0.008 if written just as a number and not as a percentage. So our federal unemployment is $56. The employer will also have to pay state unemployment tax, and that would be equal to our state rate. I'm sorry, that was the wrong tab. Our state rate is 5.4%, and that's subject to the $7,000 limit as well. So times 0.054, and that gives us state unemployment of $378, and again federal unemployment of $56. So let's go back here, and we recorded the FICA taxes payable. That's the match from up here. Then federal unemployment tax payable. You could put FUTA payable if you wanted for 56. Again, that's from here, right? Only 7,000 of their salary though times the rate, because that's the annual limit of salaries or wages subject to the tax. And then we'll credit state unemployment tax payable for that 7,000 times the state rate, which we calculated here. And then that's it for the employer share of payroll taxes. So to get the debit to payroll tax expense, we just add up these three. I'll bring back my old calculator. Haven't seen that in a few videos. Oh, let's, if I can do it, let's try it here. I'll tell you what, let's just go to the Excel sheet. We already have the 56 and the 378 there. Let's add in the 612. That's the FICA match. All right, and then now let's just total these. Love these little top and bottom bars here. We'll hit equals sum, and then you can double click on sum and highlight what you want to add together. So the employer's share of payroll taxes, $1,046. That's the debit to payroll tax expense. So we get that debit here. We go ahead, we know the debit goes first on every journal entry, so we can go ahead and write that in, and then we get to the amount after entering our three credits. Again, that was $1,046. So what happened here? Expenses increased by $1,046, causing net income and stockholders' equity to decrease by $1,046. And if you add the three liabilities together like we just did, that tells us liabilities also increased by $1,046. Now you guys, when the employee was given their check, We would debit salaries payable for 6518 and credit cash. And then when these amounts were sent in to the federal government, and state government, we would debit those payable accounts and credit cash. Same for these. All right, let's look at another one here. This Bona Foodie Company has one employee who is paid a salary of $10,000 per month. It's a nice salary, right? Okay, payroll information for the first month of the year is as follows. They tell us what federal income tax withheld was $3,600. The FICA, they just give us the rate for Social Security and the rate for Medicare. Again, I like to add those together and just think of the FICA rate as 7.65%. But you can handle it either way. You can calculate them separately and add it together if you'd like. Then we also have federal unemployment on the first 7,000 per employee per year. So only 7 out of their 10 would be subject to the tax. Same with the state unemployment. It's 5.4% on the first 7,000 an employee makes each year. So out of the 10, only 7 would be subject to the tax here. Then this is a common situation. We got a medical insurance premium withheld from the employee's check is $600, and then a portion of the their health insurance is paid by the employer. That's $800. You guys, that medical insurance paid by the employer is not a tax on the employer, so you wouldn't include it in their payroll tax expense entry. Instead, that's just another part of the salary expense. So let's take a look at this one. To record the payroll itself, I'm going to bring these down to the next page. I think it'll make it a little easier to reference. Oh yeah. So we're going to debit salaries expense for the gross amount, $10,000. We'll credit federal income tax withheld for $3,600. You guys, you might have noticed here, there's no state income tax withheld. Well, some states don't have state income tax. Our neighbor to the west, Tennessee, does not have state income tax. So some of these things can vary state to state. But we'll credit income taxes payable for the $3,600. You might want to even call that employees' income tax payable, so we know that it's what was withheld from the employee's checks and not what the employer owes based on their taxable income. All right, so next, what do we have? We want to do FICA withholdings. That's going to be $10,000 times our 7.65%. We got 10,000. Salaries expense. And we're going to multiply that times 0.0765. And that's 765, of course, and that's FICA taxes payable. Okay, so that's our next amount here. FICA taxes payable, 765. Now I'll just keep going down the list. Federal and state unemployment are not withheld from an employee's check, so that will not be a part of the of recording the payroll itself. But the medical insurance premium withheld from their check would be. So that's going to be credited to accounts payable to whoever the health insurance provider is for this company. Again, a common one, of course, would be Blue Cross Blue Shield. That $600 would be owed to the insurance company. And now if we want salaries payable, or it's a lot of times called net pay, it would just be gross salaries minus these three withholdings, you guys. And that gets us to salaries payable of $5,035. Now let's check that out over here. We've got salaries expense, $10,000. And then we had federal income tax of $3,600. FICA taxes of $765, and insurance withheld, I believe that one was $600. Yes. So if we want salaries payable, it's going to be equal to our $10,000 of gross pay or salaries expense minus the $3,600 in federal income tax, minus the FICA taxes, and minus the insurance withheld. And that gets us to $5,035 for salaries payable, which is what you see here. Again, you guys, I think if you've looked at a pay stub before, and I'm sure most of you have, this entry looks very much like a pay stub. Right? To me, that makes it one of the easier ones we do because I think you're familiar with this going into it probably. If not, you will be at some point. You always have this bigger number to the left on the pay stub and this little more sad number over to the right. But anyway, we had expenses increasing here of 10 grand, which caused net income and stockholders' equity through retained earnings to both decrease by 10 grand. And in total, these four liabilities increased by 10 grand. All right, now let's record the employer's share of payroll. So to do that, the first thing we're going to do is debit payroll tax expense. But again, we're not sure of that amount yet, so let's write it in. We know the debit goes first. Then we'll record all of our credits and total those to get the debit to payroll tax expense. So from up here, the employer is going to have to match FICA taxes payable, $765. That'll be our first credit. But then they're going to have to pay federal and state unemployment. So we got salaries expense in total of 10 grand, but remember, only $7,000 of that salaries expense per employee per year is subject to unemployment. So salaries subject to unemployment taxes would only be 7 grand out of the 10. Okay, and then to get FUTA, or the federal unemployment tax, we would say $7,000 times the federal rate of 0.008 or 0.8% gives us $56 for federal unemployment. The state unemployment, let me check that rate. I believe it was 5.4%. Yes, 5.4%. So that one's equal to 7,000 times 0.054. So the state unemployment is $378. And then we know what the FICA taxes paid by the employee and the employer, in this case the employer, are $765. You guys, so if we total those, Let's total these three. And that should give us our debit to payroll tax expense. $1,199. All right, so we credited FICA tax payable for the $765, federal unemployment tax payable for $56, and state unemployment taxes payable for $378. So that gives us $1,199 for payroll tax expense. So our expense increased by that amount, causing net income and stockholders' equity, a typo there, to both decrease by $1,199. And then our liabilities in total increased by $1,199. All right, and now we want to record an entry to record the medical insurance paid by the employer. Well, you guys, that's part of salary expense for the employer. And we credit accounts payable, and again, that's going to be going to an insurance company. A common one, again, is Blue Cross Blue Shield. So our salary expense, so that health insurance premiums paid by the employer for the employee are a part of their compensation package. So just a part of salaries expense. So the expense increased $800, causing net income and stockholders' equity through retained earnings to both decrease by $800, and our liabilities increased by $800. You guys, a common mistake here would be to multiply the full salary amount of 10 grand by the federal and state unemployment rates. Remember, that's only 7 grand per employee per year. Okay, if you have any questions there, please be in touch. And thanks again.